Hey everyone, welcome back. You know how we love to unpack the secrets of successful traders, right? Well, buckle up because today we're diving headfirst into the world of intraday trading with the S&P 500 futures.
Sounds intense.
Oh, it is, but that's why we're here, to break it down. We're taking you behind the scenes with the Inner Circle Trader, an awesome YouTube channel.
I've heard of them. Don't they actually show their trades live?
Exactly. We're talking real-time trading action. The host, let's call him the trader, he's all about sharing his process, and he's chosen the E-mini S&P, the June 2022 contracts for this particular day. But honestly, the principles he uses, they apply to any market.
So it's not just about following his exact trades then.
No way. It's about understanding his thinking. He's all about what he calls intraday profiles. Basically, how the price tends to move throughout a single trading day. And our job is to figure out how he uses that to spot opportunities. Sound good?
Let's do it.
Awesome. Now, before the market even opened this day, our trader tweeted out a possible scenario, a dip down to 4070 on the S&P. Seems straightforward enough, but I'm guessing there's more to it.
Oh, absolutely.
Yeah.
He's not just throwing darts at a board here. He's looking at something called liquidity. Think of it like this. At certain price levels, you have way more buy or sell orders all clustered together.
Okay, yeah.
Those are like the watering holes where the big institutions, the ones moving the real money, they like to make their moves. And the trader, he actually called one of these a fair value gap around that 4070 level.
Interesting. So he's anticipating where the big players might step in.
Exactly.
It's almost like a self-fulfilling prophecy if enough traders are all watching the same level.
Right, like a magnet.
But then, and this is where it gets interesting, the market had other ideas that morning, didn't it?
It sure did. Not only did it not go down to that 4070 level, it came out strong, showing real signs of bullish momentum right from the opening bell.
And this is where you separate the rookies from the seasoned pros, right?
100%. A less experienced trader might panic, try to force the trade they thought was going to happen. But not this guy.
He adapted.
He adapted.
Okay, but how do you just switch gears like that mid-trading day? Things move fast.
He uses what he calls a multi-time frame approach. So he starts by looking at the daily and hourly charts to get a sense of the overall trend.
The bigger picture.
Exactly. And those charts were already hinting that things might be leaning bullish. But he doesn't just stop there. To confirm, he zooms in, looks at the 15-minute and even the 5-minute charts.
So he's getting that real-time confirmation.
Precisely.
So he's almost like reading a map on different zoom levels, right?
Well, that analogy.
Getting both the big picture and then those street-level details. But it's more than just the technicals, right? He talks about a narrative. What's that all about?
It's like being a detective, you know?
Mm-hmm.
He's piecing together clues to understand what the market's thinking. He calls it reading the narrative. And he's not just looking at one thing. It's price action, volume, even the behavior of other traders, all giving him hints about where things might be headed. In this case, the clues were suggesting a potential upward move was brewing, especially as we got closer to the afternoon session.
And that's where things get really interesting. Because he starts talking about the New York lunch hour. Almost like the market itself takes a break. What's the deal with that?
He says during the lunch hour, you often see a change in the market's behavior.
Yeah.
Less volume, traders stepping away from their desks.
Right. Got to grab a bite.
Exactly.
Yeah.
And the typical scenario he describes, for a bullish day, you've got that morning rally, then maybe a little consolidation during lunch, kind of like a breather.
Regroups.
Exactly. And then potentially another move up as we get into the afternoon.
Makes sense. But, and I'm going to say it, this is the market we're talking about. Always full of surprises. So what happened? Did it follow the lunchtime script this time?
Not quite. Instead of just hanging out, consolidating sideways like everyone expected, there was this retracement.
Okay, so for our listeners who might be new to this, walk us through that. What's a retracement exactly?
Sure. It's basically a temporary dip within the larger trend. So in this case, we're still looking at an overall move upwards, but the price pulls back a bit, like taking a breather before the next leg up.
Okay, I get it. But it seems like it could go either way at that point, right?
Exactly. That's what makes it so tricky.
So you see this retracement, what's going through a trader's mind? It's like, is this a sign of weakness? Time to get out while I can? Or is it just the market catching its breath?
You nailed it. That's the million-dollar question. Do you bail or do you buy the dip?
High stakes poker time.
Yeah.
So our trader, he sees this retracement. What's his next move?
He doesn't even hesitate. If anything, he gets even more bullish.
Wow.
He sees this retracement not as weakness, but as a sign that the market is in a hurry to move higher.
So he's not just reacting to the price going down, he's trying to understand the why behind it.
He's reading between the lines. He talks a lot about how algorithmic trading has changed the game. You know, algorithms, they don't think like humans. They react to speed and urgency.
It's like those old school trading pits, but with computers now.
Exactly. And in this case, the lack of consolidation during lunch, that quick, sharp retracement, it all pointed to the algorithms gearing up for a big move.
Fascinating. So it's like he's sensing this urgency in the market, but how do you actually turn that feeling, that intuition, into an actual trade?
This is where his technical analysis skills come in. He starts by identifying key price levels. Think of these like support and resistance zones, but on a smaller time frame.
So it's all connected. He's using those higher time frame charts we talked about earlier to pinpoint these levels on the smaller time frames.
Exactly. He's got this whole 3D map of the market in his head. The higher time frames tell him the overall trend, the key levels, and then he fine-tunes his entry using those lower time frames like the 15-minute chart.
And this is where the rubber meets the road, right? Because we actually get to see him execute this trade in the video. He buys in, goes long, right around that 41.10 level after the lunchtime retracement. That takes guts.
It does, but that's not all. He's also incredibly disciplined with his risk management.
Oh, that's huge.
He doesn't get greedy, trying to squeeze every penny out of the move. He takes partial profits along the way, locks in gains as the market moves in his favor.
Smart, like taking some chips off the table while you're on a winning streak.
Precisely. Protect your capital. Now, I know we're talking about his afternoon trade here, but remember how he initially tweeted about that possible dip to 40.70 in the morning?
Right, before the market even opened?
Well, he actually gave several live updates throughout the day on Twitter.
Which is pure gold for us, right?
Yeah.
Trying to learn from him.
Absolutely. It's like getting a peek inside his thought process. For example, he points out the previous day's high.
Oh.
He recognized early on that this level would be key, even before the market broke above it.
He's anticipating.
Always. He's not just reacting to what's happening, he's thinking steps ahead.
And then there's that term he throws around, SMT divergence. I'll admit I had to look that one up. Can you break it down for our
It's a
listener?
thing, it stands for stocks minus treasuries. Divergence. Right. He basically uses it to compare the performance of the S&P 500 to the treasury bond market.
Interesting. So, like, are stocks outperforming bonds or vice versa?
Exactly. It's all about relative strength. It helps him identify times when stocks might be overextended, maybe due for a pullback, or times when they're poised to make a big move.
It's another layer of confirmation, another piece of the puzzle.
Exactly. He always emphasizes the importance of having multiple factors lining up before making a move. It's like waiting for all the lights to turn green before you cross the street.
I love that analogy. You don't want to jump in on a red light, especially in trading. Speaking of analogies, he uses another one to describe how you don't need to perfectly time the market to catch the absolute top or bottom of a move to be profitable.
Oh, the lion's share analogy.
Yes. What's that all about?
He's basically saying you don't need to eat the whole cake to be satisfied. Just focus on capturing the lion's share of the move, the meat of the move. Don't get greedy chasing those last few pips.
It's about consistency, right?
Exactly. Consistent profitability, not trying to hit home runs every single time.
Now, one thing that really struck me watching this whole video was his emphasis on screen time. This isn't just some fancy algorithm doing all the work, is it?
No way.
Yeah.
He stresses that developing the skills to read the market, to see those subtle cues, it takes time. Hours and hours of dedicated screen time. It's like learning a new language, You've got to immerse yourself.
Like that whole 10,000 hours thing, right?
Exactly. It's about observation, pattern recognition, understanding how the market behaves under different conditions.
Becoming a student of the market?
Precisely. He even says that he still learns something new every single day.
That's the mark of a true master. And speaking of learning, he doesn't shy away from his own mistakes either, does he? He actually talks about misjudging the market earlier in the day. I mean, he could have easily edited that part out, made himself look good, but he owns it.
Exactly. It makes him relatable. He's basically saying, hey, I'm a professional trader and I still make mistakes. It's part of the game.
He even jokes about how he's sharing his warts and all trading journey.
Love that.
Yeah.
And more importantly, he turns those mistakes into learning opportunities.
Right. Instead of just brushing it under the rug, he breaks down exactly why he misjudged the market initially, how he recognized his mistake, and what he did to get back on track.
That's gold for any trader. Learning to adapt, to admit when you're wrong, that's huge.
It's so important. He also emphasizes that there's no one-size-fits-all approach to trading.
Definitely not. We're all different.
He encourages viewers to find what works best for their personality, their risk tolerance, even their lifestyle.
He's big on that self-awareness aspect of trading.
Totally. And he actually shares some alternative setups and entry techniques that align with his overall trading philosophy. So it's not like he's saying, this is the only way to trade.
It's more about understanding the principles.
Exactly. Adapting those principles to different market conditions and, of course, your own personal preferences.
Finding your own edge.
Exactly. It's
Yeah.
like he's giving you the ingredients, but then you get to experiment in the kitchen a bit.
I like that. Find your own trading style, your own rhythm.
And you can tell he's really passionate about teaching.
Oh, absolutely. He genuinely wants others to succeed.
He actually mentions in the video that he's not accepting new members into his private trading group anymore.
Really?
Yeah. Instead, he's decided to focus on sharing his knowledge openly through his YouTube channel and Twitter.
That's awesome.
He sees it as his way of giving back to the trading community.
It's incredibly generous.
Yeah.
And it really speaks to the fact that there's no secret sauce to trading success, right?
Right. He even jokes about those get-rich-quick schemes out there, emphasizing that true mastery in trading takes time. It's a journey.
It's a marathon, not a sprint.
Couldn't have said it better myself.
Hmm.
He compares it to becoming a skilled artisan, honing their craft over time. It's about dedication, practice, and a deep understanding of your tools.
Respecting the process.
Yes. Well, this has been amazing. I always learned so much digging into these real-life trading examples.
Me too. It's one thing to read about it in a book, but to see it play out in real time, it's priceless.
So, to wrap things up for our listeners, what are some key takeaways from today's deep dive?
Number one, don't be afraid to adapt. The market doesn't care about your initial bias.
Right. Be willing to change your mind when the market tells you you're wrong.
Exactly. And remember, risk management is key. Protect your capital.
Always. Okay. Anything else?
Yeah. And maybe most importantly, enjoy the process. Trading is a journey of continuous learning.
It's about more than just the profits, right? It's
Yeah.
about mastering a skill, challenging yourself.
Couldn't agree more.
Awesome.
Mhm.
Well, we want to thank you for joining us for this deep dive into the world of intraday trading. We hope you found it insightful and maybe even a little bit inspiring.
Until next time, happy trading, everyone.
Happy trading.